Eco's podcast for the 11th of November. Last week saw the ECB take a surprise turn when it cut interest rates. We mentioned in last week's podcast about the lower inflation number that was an interesting talking point on the basis of would the ECB respond to that lower inflation number. At the time, only one or two economists out of a poll of 73 thought that they would move in November towards a rate cut. So therefore, when they did, it was a surprise and caused some fairly immediate reaction to stock markets. This number was actually followed quite closely by a much bigger than expected GDP number in the US. So the markets were really in that sort of pull and push situation of looking at a European market that was slowing on inflation and a US market that was really moving faster than expected with talk of tapering. So some quite big moves overall seen in the stock markets, which we'll take a look in the charts. So let's just take a look at the diary for what we can expect for this week. First of all, it becomes a little bit more domestic focused because we have inflation data out on Tuesday, UK CPR and IPR. The indication here is that all-important 2% target, well, the number is expected to come in around 2.5%, so gently sort of moving in the right direction on inflation. The Bank of England indeed will have their quarterly inflation report on Wednesday, so much more in-depth analysis of what is taking place within the UK economy at the moment, which seems to be continuing to benefit from upgraded estimates going forward into 2014. In terms of some of the corporate reports, really we've got a number of companies highlighted here in black that impact on research stocks for us. Vodafone in particular we'll take a look at a bit later, but we're hoping for slightly more positive news out of Europe from Vodafone. In the US, Yum Brands is going to be a talking point for us, and also in the insurance sector, esure, which has had a pretty dismal showing since its flotation just over a year ago. The company issuing a profits warning, which did cause quite a sharp fall in its stock price earlier this year. We'll be looking for a more positive tone to esure during the course of this week. On Thursday, Serco, the Sunday Times this weekend running a story. They think a profit warning is coming from Serco. Nothing out as yet on Monday morning from that company, but the report out on Thursday. And also Centrica this week. Really been in the spotlight since Ed Miliband's comment about capping pricing in the energy sector has impacted on Centrica, where we've seen a fall of around 10 to 15% on that price. So we'll be looking for comments out from Centrica this week. So just taking a look at some of the charts, and indeed we will start with Centrica, and you can see really the reaction during October. That stock having hit close to 400 pence, down to around 351. At the current time. So it has really, this whole issue about pricing control has impacted on sentiment around that sector. I want to also take a look at the euro. If we stand back and look at what is the main focus for the ECB, and I think will be over the coming months, it is to try and devalue the euro. The purpose of that, of course, is to try and make the euro more competitive on international markets, and indeed that to try and sort of import some inflation, just to try and get that inflation number moving, certainly across some of the southern areas of Europe at the moment. The FT reporting this morning that tension is building between the northern and southern European countries on the back of the ECB cuts last week, and indeed the policies that Mr. Draghi seems to be introducing now into that interest rate cut last week is causing some concerns, particularly say with Germany and Holland. So the net result of that move last week was a fairly sharp movement lower. From year-to-date highs on the euro against the dollar, back from 138 back into the sort of range of 133.76, and as I say, expect further policy action there designed to try and lower the value of the euro. In terms of the UK, well, actually sterling against the euro has been nudging higher. This is obviously partially a reflection from a slightly cheaper euro, but obviously it is reflecting strengthening thoughts about what we're seeing in the UK economy at the moment, augmented, I suspect, by the inflation data tomorrow. So there is a slightly tightening feel to the UK market in terms of potential monetary action further down the line, which is bringing some money in for the sterling. And as I say, we are seeing sterling versus the euro start to nudge up back towards sort of highs not seen since the start of this year. Now, in terms of what this means for bonds, well, the 10-year bond market for the UK still holding on to some sort of premium there at 2.76% at the moment, so very much in line with what we are seeing in the US market. This chart here shows the US market, and that GDP number from last week coming in at around 2.8% versus 2% expected, putting quite a bit of life back into the US 10-year bond, trading up from around the sort of 2.6 to 2.75% at the moment. Now, if we cast our mind back just to the summer, we may recall that as that number started to veer more towards 3%, it was sufficient for Mr. Bernanke and the team at the Fed to resist tapering and move that back into possibly 2014. So we are seeing those yields begin to climb back into sort of highs not seen since that tapering comment back in September. So it will be interesting to see if that sort of moves ahead further this week, what impact that may have on sentiment around the tapering talk. In terms of corporate results, well, as I say, last week we saw some very good moves on the share price of Rolls-Royce, a very comforting statement from Rolls-Royce in terms of their guidance for the full year. A little bit of tweaking on marine, but on the defence side seems to be looking quite positive for the group. It is one of our covered stocks, and as you can see there, back up towards the year highs for Rolls-Royce. And indeed Vodafone, we mustn't lose sight of Vodafone, because the bid by Verizon for the US business of Vodafone has been a sort of well-received development for the group, and the stock price has been moving higher. 226 on Vodafone this week. We have got the corporate results, as I mentioned, due up this week. And not to lose sight also of Verizon, because for Vodafone shareholders, they will be receiving shares under that corporate action in Q1 2014 in Verizon. The stock now trading towards the top end of the collar range of $47 to $51 for the Verizon stock at the moment. So really quite a healthy picture building of Verizon at the moment, and as I say, reflected in that share price chart.